Justin Sun is lashing out at WLFI and going head-to-head with Trump. One seeks revenge, the other never backs down. Do you think Sun is in trouble, or is a turnaround coming? X is making a big move, aiming to take over the exchange business. If US crypto legislation doesn't pass in May, Bitcoin's price will be hanging by a thread. Tuesday, April 14th. This is BitcoinTV's Chinese channel. Where is the Crypto Alliance? I'm Michael. Our daily report is broadcast simultaneously by local anchors in Vietnam, Japan, Korea, Thailand, Spain, and English-speaking regions. First, let's look at the most important 24-hour crypto data headlines, sponsored by NEXO. What is NEXO? It's the world's most compliant licensed exchange after Coinbase, and it's now in Asia. Don't just think of it as a simple crypto-to-crypto exchange. Their goal is to help major Asian clients achieve value growth, staking, lending, daily spending, and efficient turnover of digital assets without selling, all while staying compliant. So scan the QR code on the screen to get all trading rebates and fee discounts. Plus, you'll get a $5,000 bonus when you deposit. If you register and deposit successfully, save your UID. On Sunday, we'll use it to draw prizes of up to $1,000. Okay, let's look at the headlines. For Bitcoin right now, the bull-bear cycle indicator is below the zero line. What's that mean? Fewer people are making money. When exactly was the real bottom in the past? Well, this particular indicator does not simply stop at zero. Instead, it actually continues to drop further, moving deeper into what is known as the bear market zone. This is then typically followed by a period of massive losses and widespread liquidations across the market. Panic starts to set in, and people begin to give up and leave, often cursing blockchain technology for their losses. That is the real bottom, so the pain is really just beginning. If weak hands are not flushed out, the bottom is still far off, so hold on to your USDT tightly. You say it's a bear market, but this rally seems counterintuitive, right? Price jumped from 63 to 73,000. Our Monday member review shows when to trim positions. That's because leverage is dropping. Binance's open interest fell from 1.9 billion to 1.19 billion. Simply put, fewer people are using leverage. In this market, it's usually not new money buying in, but shorts being forced to cover and close their positions, which pushes the price up. But in a way, this kind of growth is healthier because less leverage means lower liquidation risk. The issue is, this rise is squeezed out, not built up. Without new capital to take over, it could easily lose momentum. So, we'll see if the open interest can keep climbing from here. There's some friction between Twitter and the crypto world now. First, they cut off ad revenue for many calls. Then, product manager Nikita Beer ramped things up, saying new crypto accounts will face verification on their first post. Supposedly, this is to eliminate 99% of phishing and bot accounts. But the industry wasn't having it, seeing it as a barrier for new Twitter users. Soon after, he debunked it himself, saying crypto's been rough this year and it's time for something new. So the tone shifted instantly. Solana's official account retweeted him in 47 seconds, and CoinGecko followed suit. What does this speed tell us? You get it. If you need an account or a bot, you really should hurry up and get one soon. Now, Twitter says they're getting ready to launch a smart cash tag so that all 600 million users will be able to buy crypto and stocks directly right from the platform. This isn't just taking users, it's taking the exchange's livelihood. Now, for today's top story, let's look at the FIT21 Act. It's vital for everyone in crypto, including exchanges and stablecoins. The House passed it last July with a 249 to 134 vote, a rare bipartisan win, but it's been stuck in the Senate for 4 months. Some say if it doesn't pass by May, it could be delayed until 2030. So this bill is definitely one to watch over the next few weeks.
I think crypto is one of the ways in which the dollar survives and perhaps regains the primacy that it had, 20, 30 years ago, let's call it. Stable coins are hugely important, a relatively simple innovation at the end of the day.
The core compromise is behavioral rewards. Regulators ban interest on just holding stablecoins to protect bank deposits. This stems from long-term bank pressure, but earning through trading, transfers, or lending is allowed. It looks like a rule change, but it's reshaping industry logic. Coinbase and Kraken must rebuild their revenue models, linking returns to trading frequency or holding periods. Only then were the bank's concerns slightly eased.
The FIT21 Act was a major piece of legislation. Getting anything out of Congress these days is a major achievement. But in particular with financial legislation, it doesn't happen very often. I mean, there's seminal pieces of legislation that have been passed. Oftentimes they come out of crisis periods.
With stablecoin issues eased, risks focus on 3 points: DeFi regulation, the Trump provision, and AML or BSA detail disputes. Democrats fear DeFi is a money laundering tool and want to stop officials from profiting from crypto policy. Also, the scope of AML enforcement is still debated. If any of these three stall, the Senate markup is delayed. Tim Scott's January and March meetings were already pushed back. It looks like a stablecoin issue, but it's really these three unresolved points. Bipartisan cooperation is very fragile.
You should know that talk of anti-money laundering, fund security, and investor interests are just political smokescreens. The real core issue is whether stablecoins can pay interest. This isn't some small matter, it's directly challenging traditional banks. If stablecoins can pay interest, Armstrong has already spoken out. Once this rule is set and passed, exchanges can freely compete for users and legitimately improve yields and products. The way they make money will be completely upgraded. So the market is very realistic. If you look at Polymarket, the probability of this bill passing has already increased from 50% to 70%. But the issue is, what if it doesn't pass in May? You know, the EU's MITA, Singapore, and Hong Kong are all rolling out stablecoin rules. So if the US is late, it'll just have to follow these countries' lead. So essentially, it's also a matter of who gets to define the rules of the game first, and I believe the US certainly won't fall behind. In 2023, 800 million people were making cross-border transfers, and what was the result? If you've ever used the SWIFT system, you know that right off the bat, they charge you 20 to 50 US dollars, and then they take another 3 to 5%. So before your money even arrives, you've already been fleeced. Wise is a bit better, cutting it down to 1.5 to 2%, but frankly, it's still just the same old traditional banking system. So for cross-border transfers this year, the veterans have figured it out. Using on-chain assets plus self-custody and virtual cards, the fee becomes 2% plus a fixed price of 2U. So no matter how much you transfer, it'll definitely arrive the next day. It works in over 170 countries. So it's not just about a lower price, it's about showing traditional financial institutions and the SWIFT system that we don't have to play by their rules.
SWIFT is the core channel for traditional cross-border remittances. Transferring 1,000 U costs 30 to 50 U in fees, plus intermediary bank fees. The total cost easily exceeds 5%. Wise bypasses cross-border clearing through a local account network, pushing fees down to 1.5% to 2%, which was the first shock to the traditional system, but it still essentially relies on bank settlement. It's not friendly to crypto users.
No matter how cheap Wise is, it's still the traditional banking way. You know, these rules of the game, MyPay is already quietly changing things without requiring you to provide any ID or passport numbers. As long as you have USDT, you can use Alipay, WeChat, and Apple Pay to spend globally. The fee is simple, just 1.8 with no other hidden charges. And if you look closely, you'll find a test option in international remittances to transfer directly to Alipay. Alipay arrives in 2 hours, and the fee is only 1.2.
MyPay is essentially a bridging tool from crypto to fiat. It's the optimal path for users holding USDT. Exchange withdrawals require queuing and high fees, and bank transfers require waiting for approval. MyPay skips the middle steps entirely, with T+1 arrival efficiency matching Wise, supporting over 170 countries, a payment system that doesn't rely on banks.
So MyPay is just a down-to-earth tool. It respects the rules of the Web3 game, respects your transaction privacy, and protects your financial privacy. You don't need to reveal any ID throughout the process. So MyPay makes the rules very clear. MyPay is a tool. You transfer as much as you use. Don't leave money on MyPay. MyPay doesn't profit from asset accumulation, nor does it give you any investment returns. Just use it as a tool. Around April 12th to the 13th, brother Sun, Justin's son, I think he's a real man, continuous fire has pushed WLFI into the spotlight. The focus of the controversy isn't the price movement, but a more sensitive layer. Your project has a backdoor. The ability to freeze user assets means you're not decentralized enough. In fact, you're not even a real on-chain project. So, at this point, how did brother Sun go from being Trump's top supporter to WLFI's arch enemy? This identity shift really makes me break a sweat for him.
In this round of controversy, Justin Sun's first move was to shift the issue from a dispute over attitude to one over authority. The core of his public questioning isn't whether the project is good, but whether WLFI might have internal designs capable of restricting asset flow. In other words, he first brought the question of whether they even have that capability to the table.
Now, everyone, don't rush to take sides. Let's first figure out the ins and outs of this and who's who. WLFI, full name World Liberty Financial. On the surface, it's all about DeFi, dollar assets, on-chain finance, all that high-end stuff. But we all know why it really took off. The Trump family halo, right? Plus, old man Trump himself is out there promoting it. No matter how much the market dislikes it or how annoyed the Democrats are, he's the sitting president with 3 years left on the clock. So, things are pretty intense for Brother Sun. Turns out he wasn't just a bystander, he put in real money and was even Trump's top supporter.
Justin Sun first publicly joined WLFI in November 2024, initially investing about $30 million, becoming one of the most watched public investors at the time. He continued to increase his position, and by around January 2025, his cumulative investment, according to public records, reached about $75 million.
So when WLFI restricted Sun's account, the nature of the situation changed. Sun's revelation that his account was limited is essentially an insider flipping the table. Meaning, WLFI tells the world they're about rules, governance, and decentralization, an on-chain mechanism, right? But if you can block Sun and stop him from withdrawing, you can block even more accounts. So where does decentralized governance even come in? So this is like Sun completely tearing away the fig leaf of the Trump project or the WLFI group. It's not a dispute over what you blocked or what you said, but rather, what can you actually do within this WLFI project? Sun accuses WLFI of freezing his account. WLFI says, see you in court, and the market is wondering if you're actually a decentralized project at all. So you see, both sides are at loggerheads, and neither is backing down. With this controversy quickly escalating, the market no longer sees it as a theoretical issue, but a more practical one. Can this kind of authority actually be triggered? At this point, people don't care who's talking tougher. They care if the rules of the game and these on-chain governance mechanisms are just for show.
As the WLFI turmoil continues to brew, the focus has shifted from a single accusation to a full-scale scrutiny of its governance structure. The data is straightforward. Currently, over 60% of projects in the DeFi industry retain administrator privileges. This includes restricting addresses, adjusting parameters, and even suspending functions. Meanwhile, it's not uncommon for the top 10 addresses to hold over half of the voting rights. Looking back at history, asset incidents caused by privilege or control issues over the past few years have reached a cumulative scale of billions of dollars. The project team's logic is also clear. These mechanisms are part of risk control design used to handle abnormal addresses or extreme situations. But here's the problem. When risk control and asset control use the same set of privileges, if the boundaries aren't transparent, it's hard for the market not to assume the worst. This is why whenever the topic touches on whether assets can be moved, emotions instantly escalate.
Actually, the whole thing isn't that complex. Justin Sun has a point. In a decentralized system, you can't just freeze my account at will, right? As for your claims about overselling or overdrawing the account, there's on-chain data to back it up. We can settle this in court, and it looks like this lawsuit is inevitable. But there's one thing I still don't get. Think about Trump's personality. He's vengeful and petty, right? Justin Sun is going head-to-head with him, refusing to back down when he's in the right. But don't forget, is it really a good idea to offend Trump? Your public company, Tron, just rang the bell on NASDAQ. Given Trump's eye for an eye personality, could he seek personal revenge against the related companies? Even if he doesn't retaliate directly, he could still trip you up, which would be enough to deal with. So, I think this is something Tron's PR team needs to seriously consider. So, do you think Justin Sun's move to go head-to-head with Trump is worth it? Share your thoughts in the comments section.
The United States tax filing deadline is tomorrow, and $280 million in Bitcoin selling pressure is waiting. Is the market being forced to sell at a loss or rationally taking profits? Let's see if it can rebound after tax season. Geopolitical tensions. United States-Iran talks halted. Risk assets are under pressure across the board. Even crypto is caught in the crossfire. Yesterday, prices dropped 3.2%. The Fear and Greed Index fell to 12, a 14-month low. Market sentiment is near freezing point, but at critical moments, this could actually turn into an opportunity. Despite Ripple's many verbal battles, ETF inflows haven't stopped, showing institutions are still quietly increasing their positions. Actions speak louder than words. Real-world asset tokenization has arrived on Tron as on-chain finance begins to disrupt traditional sectors. A slow and steady revolution is underway.
I recently read a book called I Am Fragrant by Yang Benfen, a relatively unknown author. She uses very simple prose to describe her 70 years of married life. I want to share this because many people might be living a similar life, full of hardship at the very bottom of society. In her writing, she feels that if her husband is unhappy, it might be because she didn't do well. Just because he's not good at expressing his feelings doesn't mean he doesn't love her. She believes if she persists, she can slowly touch his heart, and life will gradually get better. But before her lover passed away, she asked a question. Would you still want to see me in the next life? Do you know what the lover said? I wouldn't. All the hard work of those 70 years collapsed because of that one sentence. How many people are going through what you think is what you think? If you don't say what you feel in your heart, others will definitely not know. So if you are also going through this kind of persistence and enduring in life, why not give yourself a fragrant life? So those 3 words, I wouldn't, have broken so many people and let so many people see the truth of life in advance. Live for yourself for a while. All right, that's all for today's program. If you find our channel valuable, please give us a like. Here are all our membership benefits. We hope you can join as a member. Let's get rich slowly together and strive together.